So this is basically the last section of Chapter 24, Statements of Adjustment. We're on page 24.17. There's a figure on the bottom of this page with a bunch of colors. It's called 24.5, Treatment of Property Taxes on Statements of Adjustments. So, left-hand side, top, we have a box. Property taxes previously paid by the seller. So, two arrows going out to one box on the left. So the buyer, it's a debit. So it's a sad thing, a negative thing. This property tax previously paid by the seller, it's a negative. It's to the buyer. It's a debit. So the buyer's portion of taxes from the adjustment date to December 31st. So this is already paid, property tax already paid by the seller. So with the seller, it's a credit because he's been paid for it, so he's got to get repaid from the buyer. It's already paid the buyer's portion. Now we go to the middle, we have a blue color, we have a property taxes not yet due and to be paid by the buyer because the adjustment date, July 21st, comes under when the buyer is already in the house. So the arrow going to the left, for the buyer, it'll be credit because she's paid for it already. All right, the seller's portion of the taxes from January 1st up to not including the adjustment date. All right, so let's get that straight. So property taxes are paid January 1st to the day before adjustment date. To the day before. All right, so for the seller, the property tax is not yet due but to be paid by the buyer. That is a sad thing, a debit. Got to pay it back. Now, on the far right-hand side, there's a box. It says taxes due but not yet paid by the seller. So for the buyer, this will be a sad thing, a debit, because the buyer has to pay it. The debit, a buyer's portion of taxes from adjustment date to December 31st. The seller has a credit, a happy thing, because she has paid the buyer's portion of taxes. Yes, that's a happy thing. But then it'll also be a debit, a negative thing. Whole year's taxes due, but plus any late penalties. Homeowners grants. The Homeowner Grant Act establishes a basic homeowner grant of $570 for eligible property owners subject to amendment. For seniors, the disabled, and recipients of war veteran allowances, the amount of the grant is $845. The Act also provides a formula for relief from school taxes in certain circumstances and is discussed further in Chapter 19. Where the tax date falls before the adjustment date, the actual taxes paid will be the figure adjusted. Where the tax date due follows after the adjustment date, the usual practice for adjusting homeowner grants is set out below. Number one, where either the seller or buyer or both are not eligible for the grant, then the gross taxes should be adjusted. Number two, where both are eligible for the basic grant, but one or both are not eligible for the senior's disabled grant, taxes net of the basic grant should be adjusted. And three, where both are eligible for the senior's handicap grant, the taxes net of the senior's disabled grant should be adjusted. Rent. Where the property being sold is revenue property, it will be necessary to adjust the rent. Rent is normally paid on the first day of the month in advance, unlike interest under a mortgage, which is paid in arrears. Okay. I'm underlining that. Rent is normally paid on the first day of the month in advance, unlike interest under a mortgage, which is paid in arrears. Assuming that the seller has previously received the rent for the whole month in which the adjustment date falls, the number of days for which the buyer is entitled to the rent is calculated from and including the adjustment date through to the end of the month, and that share of the rent is credited to the buyer and debited from the seller. If a security deposit has been paid with respect to a residential tenancy, the obligation to repay it with accrued interest by law will belong to the new owner, even if the owner did not receive the security deposit from the previous owner. Wow. So I'm underlining that. So if there's so basically the new owner's got to pay the security deposit, whether they received it or not from the previous owner. It's therefore necessary to ensure that any security deposits are adjusted between the seller and the buyer. The amount of any security deposits plus accrued interest up to but excluding the adjustment date will be credited to the buyer and debited from the seller. Since the interest rate on security deposits taken under the Residential Tenancy Act varies from year to year, the conveyancer may have some detailed calculations to perform. Property transfer tax. The property transfer tax requires that a land transfer tax be paid to the government by the buyer or transferee of property upon application for registration of the transaction at the LTO, the Land Title Office. This tax is shown as a debit on the buyer's statement of adjustments and does not appear on the seller's statement. Okay, so this will be a debit on the buyer statement adjustment, and it will be not on the seller's statement of adjustment. The tax is calculated as 1% of the first 200 grand of the fair market value of the property plus 2% of any remainder. A property transfer tax showing the calculation of the tax payable must accompany each application to register a taxable transaction at the LTO, even at the Land Title Office, even if an exemption is being claimed. The tax is payable by the buyer or transferee at the time of applying for the registration. You got that? I hope so. The property transfer tax also outlines many transactions that are exempt from the tax, including a transfer of a principal residence to certain related individuals, or a transfer between spouses pursuant to a written separation agreement or court order under the Family Relations Act. The First-Time Home Buyers Program in BC allows eligible buyers to claim an exemption from property transfer tax for certain eligible residential properties. Generally speaking, a buyer will be eligible if they are a Canadian citizen or permanent resident, has lived in BC for 12 consecutive months immediately before the date of the buyer registers title to the property, or has filed 2 income tax returns as a BC resident during the 6 years before the date the buyer registers title to the property, has never owned an interest in a principal residence anywhere in the world, and has never received a first-time home buyer's exemption or refund. Generally speaking, a property will be eligible for the full exemption if its fair market value is not more than 475 grand. Additionally, the property must not be larger than 0.5 hectares, 1.24 acres, and must only be used as the buyer's principal residence. In most cases, the purchase price is the fair market value. A proportional exemption is provided if the property has a fair market value not more than 25 grand above the threshold. So that, for example, that's up to 500 grand, is larger than 0.5 hectares, that's 1.25 acres, or contains another building on the land other than the principal residence. The threshold amounts listed here are applicable to purchases registered on or after February 19, 2014, 14. However, as assessed values of properties rise, thresholds amounts may also increase. Returning to our previous example, we add to the following facts. Here's in the blue. As the buyer is not a first-time home buyer and is not otherwise exempted, he'll be responsible for paying the property transfer tax upon the registration of the transfer. Now we do the buyer's statement of adjustment. So in the debit column, the frown, we've got a purchase price of 100 grand. In the credit, the happy column, we've got the next line, the deposit paid, 10 grand. Assumption of first mortgage, that's 47 grand. In the credit column, happy. Conveyancing fees, that'll be negative. That'll be $550. Buyer's share of taxes from August the 13th to December 31st. That'll be $637.78, which basically is calculated August 13th to December 31st. That's 141 days. And that's out of 365 days. That's times by $1,651 in tax. Yeah. Property transfer tax will be 100,000 times 1%. So basically 1,000. That's a debit. That's a negative. And then we do the balance due to complete, which are the debits minus the credits, and that comes out to 45 grand, $187.78. Note 1, because the purchase price of the property is under 200 grand, the calculation of the property transfer tax consists of only one step. If the price were over 200 grand, the calculation would involve more steps. For example, for a purchase price of 300 grand, the property transfer tax would be 4,000 as calculated as follows. Step 1, 300 minus 200 grand equals 100 grand. Step 2, 1% of the first 200 grand is 2,000. Step 3, 2% of the remaining 100 grand is 2,000. Step 4, 2,000 from step 1, 2,000 plus 2,000 is 4,000. So that's the total. Conveyancing and legal fees. The seller is responsible for clearing the title of any encumbrances not set out in the contract. Any fees for this are the responsibility of the seller. The practice in BC is that the buyer is responsible for preparing the documents for the transfer of title from the seller, and therefore the fees for the transfer are borne by the buyer. Okay. Costs of arranging financing would normally be charged to the buyer unless the offer specifies otherwise. The amount of the conveyancing fees can vary with the circumstances and the value of the property being transferred. The fees that are paid by the seller will be shown as a debit to the seller, thereby reducing the amount of cash due to him or her. The fees to be paid by the buyer will be shown as a debit to the buyer, thereby increasing the amount of the balance due to complete owing from the buyer. Items exempted from the statements. Certain payments are usually settled between the parties outside of the statements. For example, furnace oil left in the storage tank is usually paid for by the buyer separately according to the quantity measured on a date agreed to between the parties. As the statements are normally drawn up and settled in advance of this date, the exact amount would not be known earlier. Alert. A seller's listing agent, a brokerage, and salesperson representative were held by the BC Supreme Court to be 15% liable to the seller for economic loss incurred to him as a result of their negligence. The listing licensee, Ms. Meyer, failed to alert the seller to a mortgage fraud scheme perpetrated by the buyers. Littleton, a lawyer, and Foley, a licensee. Oh, those were the buyers. Those were the fraudsters. The fraud scheme was apparent in the statements of adjustments, which had been reviewed by Ms. Meyer, and which showed a cash balance payable to the buyers. What? In addition, the statements did not concur with the terms of the contract of purchase and sale. The seller had to agree to take back a first mortgage of 56 grand, but received only a second mortgage for this amount. There was a first mortgage granted by the buyers for 56 grand. The sale price of the property was only 70 grand. So this is Palmieri versus Littleton, BCSC 1979. Now we go here. All right, we've got preparing statements of adjustment. The following cases are provided as further examples of how adjustments are calculated and recorded. So case 1. This is in the blue. Ms. Chan has contracted to sell her home to Mr. Singh for 100 grand. The buyer has paid a deposit of 2 grand to his brokerage, and he will be providing the balance of the purchase price from his own resources. Conveyancing fees are $630. The completion date is September 12th, and possession is to be given on September 19th. Taxes were paid in the net amount of $1,200 on July 3rd, and a 5% commission is payable. The possession date is the same as the date of adjustment. No property tax, transfer tax exemptions apply to this transaction. So case 1, buyer's statement. And remember, the buyer's statement, the debits or the frown, the credits are the happy thing, and the debits minus credits comes out to the balance due to complete. So this is for the buyer. Okay, yes. Now we got the purchase price is a negative, it's a frown, it's a 100 grand debit. Tax adjustment, so the buyer's share of the taxes. So September 19th to December 31st, that's what the buyer has to pay because the seller's already paid it. That's so those are 104 days out of a total 365 days years. You times it by the total year taxes, which is 1,200. And that comes out to a debit, a negative, a frown, in the left-hand column, $341.92. And then we've got the conveyancing fees paid for by the buyer of $630. Now the property transfer tax is paid for by the buyer. It's a negative. It's a debit. That's $1,000. Where do we get the $1,000? It's basically the 100,000 purchase price times 1%. And then the deposit paid is a happy thing. It's a credit, and that's 2 grand. So we take all the debits and we minus all the credits, and then we come out to $99,971.92. Now we go to the seller's statement of adjustments. So the sale price will be a happy thing, a credit, 100 grand. The tax adjustment will be a happy thing too, since the seller already paid on July the 1st and is due to be paid back by the buyer, $341.92. That's in the happy credit column. And the real estate commission has to be paid for by the seller. That's in the negative sad column. Left, 5 grand. So we take all the credits and we minus the debits. We come out to $95,341.92. Now we have a second case. Consider the same transaction between Ms. Chan and Mr. Singh. This time the buyer does not have sufficient cash resources and the seller is neglected to pay her taxes. Accordingly, Mr. Singh has arranged the seller? Wait a second. Oh yeah, so the seller's Mrs. Chan. She's Ms. Chan. She's hasn't paid her taxes. Accordingly, Mr. Singh has arranged a mortgage loan from the Crown Life Company in the sum of 70 grand. The lender's costs of the mortgage, including registration fee, are $380 and will be paid by Mr. Singh. The conveyancer will pay the outstanding taxes, $1,200, plus a penalty, $150 for the late payment. So that's on Ms. Chan. So we got the buyer's statement of adjustment. So we got the frowny things here, the debits. Purchase price, 100 grand. The tax adjustment, They owe $341.92 because the seller already paid on July the 1st. So there's September 19th, which is adjustment date, to December the 31st. It's 104 days. Divided by 365 days times by the total of 1,200, it comes out to $341.92. Conveyancing fees is negative, sad. That's paid $630. And the cost of a new mortgage is $380. It's a sad negative. Oh, that's a debit. Property transfer tax, $1,000. That's 1% of $100,000. Now the deposit paid will be a happy thing because they already paid. That's $2,000. Mortgage proceeds, so they're going to be getting a mortgage proceeds from the Crown Life Company. That's $70,000. That's a happy thing. So we get the debits, all the debits, and we minus the credits for this buyer, and it comes out to the balance due to complete on the right happy column credits. That's $351.92. Now we go to the seller. The sales price will be a $100 happy credit. And so will the tax adjustment of $341.92. The real estate commission will be sad. They'll be negative. They'll be in the debit. $5,000. Unpaid taxes and penalty will be $1,350. So all of the credits added together minus the debits will equal the cash proceeds of the sale, $93,991.92. Now, in preparing a statement of adjustments, there always set out the information provided in the description of the case, accounting for each item separately. Then decide whether the item will, number one, affect the amount of cash due from the buyer, in which the case the item must appear on the buyer's statements of adjustments. Number two, affect the amount of cash due to the seller, in which case the item must appear on the seller's statements of adjustments. Or number three, affect both 1 and 2, like cash from the buyer or cash to the seller, in which case the item must appear in both statements but on opposite sides. So for example, if an item is to appear on both parties' statements and the item is a debit on the buyer's statement, a frown, the item will appear as a credit, a happy face, on the seller's statement. Case 1 deals with the simplest of real estate transactions, an all-cash deal. Case 2 shows how to account for new mortgage loans from third parties and the payment of overdue taxes. So, that's it. Good luck.